All right, so this is the 2019 sole trader, 2019 club account. Um, Now, there's a couple of things in this that were new sort of for the first time. So we just have a look here. Now, they have it in bold, so you can't miss it. So it says all fixed assets of 2 years accumulated depreciation on the 1st 2018. Would have seen that before, obviously, in service firms, so we would know what to do with that. That goes in your statement of accumulated fund. So we have to put in depreciation. Nothing too difficult there. Um, we'll check in the receipts and payments account. Got a bank loan at 18 months interest, so it doesn't tell us how much the bank loan is. Um, so we'll have to work that out. Now, I think we would have seen that before, again, probably in service firms, so that's been brought in. Uh, Now, this one here, transfer from building society. Now, you might think I've seen that before. What's he saying? But normally it's transferred to building society. So normally you're putting money from your bank account and you're putting it away into the building society. This time they're saying you're moving money back into your building society. All right, so or you're moving money back into your bank account from your building society, which suggests you had money in the building society at the start of the year. So before, when we're doing our accounts at the start of the year, you're going to have an asset of building society. Now that's new, and I'd say that caught out an awful lot of people. Um, doing the Leaving Cert last year. Just down at the bottom then, is there anything there? So the club's decided that life membership is to be credited. That's just written off to income. So you've seen that before. And the grant from National Lottery was received on a one-off basis to support day-to-day activities. If it's day-to-day activities, it's income. Okay, and it's telling us that it's to be treated as a revenue item, which means it's income. If that said it was for a new building or new equipment or God knows what, grants are generally in finance by. Um, Wages due, well, that's probably new in a club account context, but we've seen wages due elsewhere. Um, so there's a few things in here. Oh, look, this bar stock, including catering stocks, 400. So the bar stock is 13.2, so you just need to be careful with that. So there's a few things in this that we need to be careful with, but we'll give it a go. See, it is relatively straightforward as we get going. So we've got the clubhouse. So we're going to do our accumulated fund first. So the clubhouse on course is 550, and there's 2 years depreciation. Now I was reading that as we went, and it was 2% depreciation. So 2 years at 2% of 550 is 22,000. So that gives us 528. Okay, then we've got our bar stock, which is 58. Can put that straight in. Now I've got my equipment. Now equipment is 26,000, and it's, again, I was reading it. There's 2 years depreciation, and it's at 20%. So it's 20% of the 26,000. So that's 10,4, and we take that away and we get 15,6. Investment interest due is 400. Now, anytime I have investment interest due, I have to have investments. So I'm just going to write investments there, and if when I get to them, maybe at the top I'll put them in. If not, I know I'll have to work them out. So investments interest due suggests investments, so make sure you put them in. So bar debtors then is an asset, 480. Life membership is a liability, 45,000. Creditors is a liability of 750. Wages due, liability, 1640. Levy reserve fund is a liability. And subs prepaid is a liability. Okay, so there was no investments. So I'm going to go work out my investments now. Okay, I'm also going to put in straight away before I do that, this transfer from building society means we had 10,000 in the building society. Just going to do that before I forget it. Okay, I'm going to go work out my investments. So this is so I've got investment income, and its interest on 4% investments is 2.8. Included in that, I've got my investment income due on the 1st of the 1st, which was 400. So that gets taken away. Then of course it's always good to check straight away to see if there's any investment income due at the end of the year. And of course there's 300. I just don't know why that's a percentage, so so that gives me 2,700 as my investment income for the year. Now I know that I need to just do this. I'm going to put investment income, 2,700 is an income, so I'm going to put that straight away in. Okay, now that 2,700, so 4% equals 2,700. So that's my investment income. So 100% then must equal 2,700 divided by 4 multiplied by 100. That's 67.5. So my investments are 67.5. Just put these over in the second column. So, all right. So that's my investments, right? So I go down and look at the rest of my receipts and payments. So I've got a bank balance, normally on the receipt side, so which will be an asset. In this case, it's on the debit side, on the credit side. Sorry. So my bank is 7,300, a liability. Okay. Then I've got I've done my investments, I've done my building society, I've done my bank. Then I have my bank loan and 18 months interest. So I've got a loan, then I'm going to have loan interest due. Now normally it tells us what the loan is. So say bank loan of whatever, 18,000 or 20,000 or whatever it might be, and you can work out the interest from there. It doesn't do that for you this time, so we actually have to work out the interest. So if we take the loan, right, and we say that the loan is 100%, and then we say the interest is 3% for 1 year, so it's going to be 3% for 1 year. We have the loan for 18 months, so 1.5 years. That'll give you 4.5%. So in total then, the loan plus interest is 104.5%. Okay, so we need to find out what the loan is. So the loan plus interest is 104.5%. That's 20,900. Again, that is down as being a percentage, so I'll just format that. Okay, so the 100% then is going to be 20,900 divided by 104.5 multiplied by 100. Which is 20,000. All right, so we've got 20,000 there. The loan interest then has to be the difference, which is 900. So now we're in business. We can work out the rest of it. So the loan is 20,000. The loan interest is 900. Now that's for 18 months. Okay, so loan interest for 18 months. We've paid the loan back this year after 5 months, so the expense is for 5 months. So this year's element. Now that means there was a loan interest due of 13 months at the start of the year. So we can take that 900, divided by 18, and multiply by 5, and you get 250 is the expense and 650 is due at the start of the year. I'm going to put both of those numbers in. So loan interest expense is 250. The loan interest liability is 650. So I've got one more to go in, which is always down at the bottom. My levy due. Now, if you remember, levy is a liability, but levy due is money that's owed to us. So it's from last year, so it's the 50 by 200 members, or 50 by 20 members, sorry, which is 1,000. Okay, so I think that's everything in. So I'll add up my assets and add up my liabilities. So 628,780 and 107,240. I'm going to take them away. And you get 521,540 as your accumulated fund on 1st of the 1st. So nice tricky, well, a few little tricky things. As I said, that transfer from Building Society was new. That loan was a little bit tricky. The bank being on the other side, and then of course your interest working. So anyway, that's what that is. That 521,540 is going in your finance by. Okay, then we're good to go. All right, so when I've that done, I'm going to do my my bar trading account next, just to get that out of the way. So we've got bar receipts, or bar sales. So bar receipts are 66.2. We're going to take away debtors at the start of the year, which are to do with last year. So we've got bar debtors of 480. We're going to add on bar debtors at the end of the year, which are 500. So that's 66,220. Then our cost of sales, our opening stock from the top of the question, which is 58. We're going to add to that our purchases. Nothing exciting in this. We've got purchases 38.7. We're going to add on, or we're going to take away our creditors from the start because they're to do with last year, and add on our creditors at the end, which are 1230. So that's 39,180, and then we've got our closing stock. Remember I said just be aware that included in the closing stock is a catering stock of 400, so the closing stock is only 13.2. Yeah, nothing that you haven't seen in loads of questions, service firms, incompletes, all sorts of things. So normally it's stock of oil or whatever. So your profit is 34,440. So let's put that bar profit in our income. Okay, when I've that done, I'm going to go back to the top of my question and work through it from top to bottom. So first one is clubhouse and course. Now, we've got a clubhouse of 550. We haven't done anything to the clubhouse. We haven't extended it. We haven't built an extension. We haven't sold any land or anything like that. So it started at 550. It remains at 550. Now, there's accumulated depreciation. So there's 1 year's depreciation, which is 11,000. So we're going to have in our expenses depreciation of clubhouse. That's 2% of 550, which is 11,000. And of course, our accumulated depreciation is not 11,000 like it normally would be in club accounts. It's 11,000 plus the 22. So it's all of the depreciation. So the accumulated depreciation is 33,000. Okay, that's our first one. 517 then. So we've done the clubhouse, we've done the bar stock. So our next one is equipment. And if we see, we started with equipment at 26,000. Then see if we sold any. On the left, we didn't. See if we bought any. We purchased equipment for 15,000. Doesn't matter when we purchased it for this part of it. So it's 26 plus 15 is 41. And then we've got to depreciate it. So I'll come down and do my depreciation working. So we know it's 20%. So it's 20% of 26,000 for the first 3 months of the year, because you only have 26,000 for the 3 months of the year. For the remainder of the year, you've got 26 plus 15, so you've got 41,000, and you've got that for 9/12. Which is 6150. So that's 7,450 as your expense. So your depreciation of equipment is 7,450. Now you have to add that on to your accumulated depreciation of 10,4. So 10,4 plus the 7,450 is 17,850. So that gives you 23,150. Now say it sold a piece of equipment, you'd obviously have to take that into account in your accumulated depreciation as well, and you would take that out. But you haven't sold any equipment. Again, you'd have seen that in loads of questions if that came up. So that's that done. Next one is investment interest due. So I think we've done the investment interest, haven't we? No, we've put it in. Now I'm just going to want to put in the investments in my fixed assets. And if you have investments at the start of the year, well then you've got investments at the end of the year as well. So just in case I forget. So my investments are 67,500. So just be aware of that. That's one I always leave out. So if you've got investments at the start of the year, you have to have investments at the end of the year as well. Bar debtors we've dealt with. So the next one is life membership. So we'll have a look. We've got life membership of 45,000. Normally we add new life members. So we have 5 new life members, bringing the total to 15. So 45,000 is 10. So it's 4,500 per life member. So we can 4,500 by 5 or divide that by 10 and multiply by 15. And your life membership should be 67,500 to start off with. And then it tells us that we're writing them off. I've done that right, sorry. Let's have a read there. Life membership is 45,000. 5 new in addition to the 15. Sorry, I read that wrong. So Just be careful though. So 45,000 divided by 15 is just 5 new members. So at 45,000 divided by 15 is 3,000. So there's an extra 15,000. So it's 45 plus 15 is 60,000. So life membership written off. They're being written off over 10 years. So it's, again, I'll just show you that. So it's the wording is important. It's 5 new life members in addition to the 15. So 45,000 divided by 3 multiplied by 5 gives you the new life memberships. So that's or divided by 15 multiplied by 5. That gives you 15,000. So that brings you up to 60,000. Life memberships written off then will be 60,000 divided by 10. Which will be 6,000. So your life memberships is 54,000. Okay, life membership gets written off to income. So it's the opposite of depreciation. So every year you're taking 6,000 from your pot of life membership money and you're moving it over to your income. Okay, so that's that one done. Bar creditors is done. Wages due. Now wages due is general expenses or sundry expenses. So if it's due last year. So we're going to take it away. It's due at the start of the year. So we're going to take that 1640 away. Hopefully there's no other so just see what unless there's wages, because there was a mention of wages at the bottom. I just want to be careful with that. Wages due wrote to the club provided, so wrote to the club coach provide for further wages due. So it might be coaching expenses. So I'm going to just leave that out for the time being, and I'm going to put it into coaching expenses. Okay, now there's going to be a working involved in that. So coaching expenses at the moment are 5,600. So just come down and do working. So coaching expenses are 5,600. I'm going to include the wages due to the coach. So we take those away. So the wages due at the start of the year are 1640. And now it even tells us its wages on the first row to the club coach. Provide for a further 2,500 due at the end of the year. So we're going to have to add that on. So there's wages due at the end. And that gives you 6460 for your coaching expenses. Okay, so 6460 go into expenses. So again, I would always suggest reading the question through at the start so that you can pick up on those things, maybe using your highlighter, highlighting a couple of those areas. Levy reserve fund 30,000. It's normally straightforward enough. Into your finance buy. So at the moment it's 30,000. There's a levy for next year of another 30,000. So it's nearly always just double it. So that's 60,000. So 30 plus 30. So 30,000 plus 50 by 600 is another 30,000. So we just add those together and that gives you your 60,000. Then we've got our subs working. So subs in advance is your sign to do your subs working. So we've got subscriptions of 1269. Subs in advance is added, right? So we're going to add subs prepaid, start of the year, paid last year but to do it this year. So then we have to take away everything at the bottom. So our 5 new life members. So that's not subscriptions, it's life members. So we're going to take away that 15,000. Subs for next year. That's not for this year. It is subs, but it's for next year, so we take it away. You've got your levy of 30,000, so it's not subs, so it gets taken away. And then your levy of last year is not subs, and it's not this year, so it gets taken away for 2 reasons. So add on the 1900, take away the stuff at the bottom, and you're away, and you get 81,900 as your income. Okay, so that's the subs done. We're flying along here. We've done the 2 years depreciation, so we can start putting in all the stuff from here. So we've done subs. Now, next one is catering receipts. Now, it's a little bit tricky on this. So you've got catering receipts of 8.5, and just do it as a working. So you've got your receipts of 8.5, and then you have your catering expenses. And if you think about it, you've got your expenses here of our catering purchases of 4.9, but if you remember, you have a stock of catering at the end of the year, so less catering stock. So it's nearly like a shop profit here. Remember, it'd be opening stock of 0 plus purchases of 4.9 minus closing stock of 400. So the 400 gets taken away. So in reality, your catering purchase is only 4.5. So it's 8.5 minus 4.5, which is 4,000. Again, that's new, but it's not really new. You just have to be aware of those things. Okay, just as you're doing them, just be aware of them. So your catering profit of 4,000. That just goes straight in. Now, that's our catering. Our interest is in. Bar receipts is done. Next is entrance fees. So we can just put that straight in. Sponsorship. Just be willing to change all these later, but there's normally no change to sponsorship. The grant, now if you remember the grant, the lottery grant, we were told to treat that as income. Revenue means income. So 15.5. Competition receipts and competition prizes. So put that in as competition profit. So 28,000 minus 20,100. So 7,900 for your profit. Transfer from building society. Now I've taken that out of the building society. It's in my bank now, so I don't have to do anything with that. All right, it's not in a current asset or anything like that. It was a current asset. It's not anymore. Okay, so I think that's them all. We'll see in a bit. Anyway, the bank balance doesn't go in. Purchases is done. Catering is done. The equipment and its depreciation is done. The sundry is 81.5. So normally I take away my wages, but I was told not to in this case. Competition prizes is done. The coaching expenses is done. My loan interest is done. And my balance is a current asset this time. So balance at the end of the year 83.3 means it's on the debit side next year, so it's a current asset. So I'm going to add them up provisionally. May have to come back and change one or two of these in a little while, hopefully not. So take them away and we'll get our excess income. Alright, so we're going to get everything in from the bottom. So we have our stocks. So we have our bar stock of 13.2 and our catering stock of 400. We have our bar debtors as an asset and bar creditors as a liability. There's 1230. Investment interest due as an asset. Could put these all in at start if you want. You don't have to. 5 new life members we've done that. Subs prepaid for next year's liability. The levy we've done, and levy for last year doesn't go in our balance sheet for this year. Life membership written off we've done. The grant is revenue we've done. Equipment depreciation is done. And wages due is a liability. Okay, so that appears to be everything in. Just finish this off. Hopefully it balances. So our fixed assets 540, 150, and then add on the 67, 5, and gives you total fixed assets of 607, 650. 13. Just add up my my stocks and all that. 97.7. Add up my liabilities. 4630. Take them away from each other to get the working capital, which of course we add on because it's a plus. And it's 700,720. Add in my excess income here, which was 60 something, 65,180. That's obviously from my income and expenditure account. Add them together. It's going to have a 20 at the end anyway. 700,720. So that's balanced. That's done. So just show you the little theory part now. So it says the club would like to build a new driving range for 350. Outline the options available to the club in funding this project with reference to the accounts. So what could they do? So they could fund it. How could they fund it? So they could fund the driving range by. So what can they do first of all? So first of all, they've got money in the bank, don't they? So they've got 83,300 in the bank. So always refer to it, so give the number, 83,300. What else could they do? Well, they own investments, we know that, so they could sell the investments. And the investments are 67,500. That would give them over 150,000. We'll just show what that would give them. So 150,000. What else could they use? They could use the levy. We don't know what the levy is for. Now the only thing is, you have to just maybe show that the levy could be for something. So the levy reserve fund is, let me just see what's in the levy reserve fund. It's 60,000. So that's not really available to them. So maybe funds available. We can say it's not available for them. We don't really know. It's 90,800. So they have to find 90,800. So where could they get that money from? So, how much do they need? They need another, what does it say? They need another, so balance needed would be 350 minus 90,800. So they need another 259,200. So what could they do? So we've already said they could sell the investments, they could use the money in the bank, and they could borrow the money. And why can they borrow the money? Well, they're in a very healthy position. Um, they have no loans as they repaid the loan this year. The levy could have been levied for this purpose, which what would that mean? The levy could have been levied for this purpose, which would mean they would have to borrow less. And then you always say, right, we just have to be careful. Just so you can see that. So they should be careful. However, as much of their income comes from sponsorship, entrance fees, and lottery funding. It's not guaranteed funding. So that should get you to 10 marks. You've shown how much money is available, so you've referred to the accounts. You've shown that they're in a good financial position without a loan, so they can borrow the money. And you just made reference to the fact that they have a levy. Some of that levy might have been used, for all we know, or that there could have been asked of the members for club development, so therefore it could be used for that. So you're understanding what a levy is, but then you're also aware that a lot of their income that we're saying that they could use, such as sponsorship, lottery funding, and so on, that's not guaranteed every year. So you just have to be careful around that. Anyway, that's that question done. Hopefully that's of some use to you.